$100 million gone in 60 minutes. That's the headline number flashing across crypto liquidation trackers this afternoon. It explains why XRP slipped from yesterday's $2.26 to roughly $2.15, while Bitcoin fell below 104,000 and Ethereum lost the 2,500 handle. Welcome back, XRP community. If you value real-time context over hype, hit subscribe now, smash the like button to support long-form analysis, and drop hashtag XRP in the comments so the algorithm knows this community trades on facts, not rumors. That, as always, a reminder. Bitbabo still offers €20 free simply for opening and verifying an account. Deposit 20, verify, withdraw 40. No sweepstakes, no strings attached. The registration link and a 2-minute tutorial sit in the description. Free capital is the best hedge when markets throw curveballs like today's liquidation wave. At the center of today's sell-off sits the Israel-Iran standoff that refuses to cool. For weeks, markets assumed Washington would avoid direct involvement. That assumption cracked last night when Israeli officials leaked that Prime Minister Netanyahu now believes U.S. forces will likely enter the war within days. Futures in Asia sold off first, European equities followed, and by the time U.S. traders woke up, risk was being yanked off the table. Commodities spiked, the VIX jumped, and crypto, always the fastest money, dumped hard. Liquidation bots tallied $100 million in forced liquidations across major exchanges within a single hour, a stark reminder that leverage magnifies fear. If Washington does step in, most desks expect a chain reaction. Regional allies choose sides, oil pops, shipping lanes tighten, dollar liquidity lurches, and every risk asset reprices. That's why algorithms dump first and ask questions later. While missiles and drones attract headlines, a quieter battle is already underway. Iran's National Cyberspace Authority reports a large-scale cyber attack, allegedly launched from Israel, disrupting internet and mobile networks nationwide. The BRICS intelligence channel confirmed widespread outages. If core banking networks lose connectivity, local commerce stops. That scenario highlights a counterintuitive strength of XRP Ledger, offline signing. Validators can approve transactions without continuous internet, then broadcast once connectivity returns. No other large-cap chain has that battle-tested feature. In war, payment resilience isn't a meme. It survivaled AS. If war headlines weren't enough, the macro calendar is stacked. Tokyo's Bank of Japan meets tonight. The U.S. Federal Reserve decides rates tomorrow, and the Bank of England follows on Thursday. Each could jolt Forex and bonds, but the Fed remains king. Prediction markets price a 97% chance of no cut. Holding at 5+% funding costs keeps pressure on growth, yet a surprise cut, however unlikely, would ignite an instant risk rally. Traders are buying short-dated options in both directions, setting the stage for more whiplash. Back in the United States, regulatory clouds refuse to clear. The SEC just filed to delay its decision on Franklin Templeton's proposed XRP spot ETF, originally due June 18th. The agency has already punted Wisdom Tree, Grayscale, and others. Why another delay? Court watchers point to the still-open Ripple lawsuit. Until Judge Annalisa Torres formally closes the case, and the suspended appeal stays closed, the SEC is unlikely to bless any product that delivers physical XRP exposure to U.S. investors. That legal overhang explains why Canada's Toronto exchange now lists XRP while Wall Street waits. The irony is thick. U.S. innovation throttled by U.S. regulators while foreign markets race ahead. Ripple's June 17th letter supporting an indicative ruling could accelerate things, but until the judge signs off, American issuers remain stuck. Time, however, does not wait for lawsuits. Full ISO 20022 migration at U.S. and European banks is slated for November. Those back-office upgrades demand assets that can plug into real-time payment lanes. Only a handful XRP, XLM, XDC, Algorand, Hedera tick all technical boxes. Every month, the lawsuit lingers risks, missing integration windows. That's why Ripple's latest filing matters. It seeks a final ruling before August 15th, giving banks 3 months to greenlight pilots ahead of the November switch. If war drags on and macro stays volatile, banks will crave settlement rails that cut costs and operate even under cyber assault. What now? First, recognize that price is a snapshot of fear, not a verdict on fundamentals. Utility chains do not lose their code base when missiles fly. Second, respect volatility. If you're leveraged, tighten stops or trim risk. If you're cash heavy, set staggered bids below spot. Panic wicks are common when liquidations cascade. Third, follow the legal calendar. The moment a final order hits Pacer, options implied volatility on XRP is likely to explode, up or down. Being positioned ahead of that binary event is a portfolio decision only you can make. Subscribe right now with all notifications on. The next liquidation spike or legal filing could break while you sleep. Hit like if you prefer context over clickbait. Comment hashtag XRP with your plan. Buying dips, waiting for clarity, or hedging into stable coins. Liquidity leaves faster than it returns, but protocol innovation doesn't pause for war or regulation. Today's 100 million flush feels brutal, yet it also trims weak leverage and sets the stage for rational allocation. Whether Washington fires missiles or Judge Torres fires the last shot in court, XRP's ultimate value will hinge on solving real settlement problems. Those problems aren't going away. They're getting louder. Stay safe, stay informed, and remember that markets test conviction before rewarding it. I'll see you after the Fed.